And hello, everyone. Welcome to another power scanning session. It is August 2nd. My name is Daniel, and together today, once again, we will be on the hunt for the most interesting swing trading setups for the week and the week ahead. And a quick spoiler alert, there are so many of them this week. As we all know, the markets corrected on Friday after poor uh, job data on Friday, and there are many interesting opportunities right now. So let's look forward to this. But before we get into it, where are you guys hailing from today? I am hailing from Montreal, our beautiful office here, right smack downtown Montreal, right in the middle of the action, so to say. It's a beautiful summer day, blue skies. Where are you guys calling in from? Who do we have? Please put your location into the Q&A box. All right. Hey, Frank from Den Haag. Hey, Frank. How's it going? Nice to see you again at our session. Werner from Frankfurt. Hey, Werner. Welcome back again. I know Werner was at our German webinar at 10 a.m. this morning already. So thanks, Werner, for joining us for this one as well. Aubrey from slightly cooler and more bearable Cyprus. Oh, yeah, that sounds good. I know it gets very hot there in Cyprus, firsthand from my visit back then. Akim from Wuppertal, from Germany. Hey, Akim, how's it going? Tien from Garden Grove, California. Hey, Tien, how's it going? Greg from Idaho. Hey, Greg, nice to see you again. It's been a while, I believe. Good to see you. Keith from the Scottish borders, on the Scottish side. Yes, from Scotland, of course. Hey, Keith, nice to see you. Lenny from beautiful New York. Crisp day today. Yeah, I hope it dried up. I saw some crazy pictures of all the flooding in New York. So, Lenny, I hope your apartment stayed dry. Steve from Southern California. Hey, Steve, how's it going? Devendra from Princeton, New Jersey. Hey, Devendra, how's it going? Gerald, how are you? From Santa Fe, Gerald. We had a phone conference a bit earlier this week to sort out some issues with the strategy builder. Sven from Aalen. Hey, Sven, how's it going? Stefan from Hamburg. Nice to see you. Yes, hello again. And John from Austin, Texas. Perfect. Well, thank you guys so much for sharing your location. Let's get into it. All right. So once again, today we will be on the lookout for what we call swing trades. So swing trades typically approximately has a duration of 2 to 20 weeks. So it's right in between like day trading, which are very short term. You perhaps will open trades within the same day and close them within the same day, and investing, which could be really long term. So swing trades are right in the middle of these things. And our dashboard, our Liquidity View dashboard, is designed to find these swing trades very fast. We actually call this the 13 minutes Sunday strategy, because our idea is that, you sit down on Sunday, maybe after having a nice dinner with your family, you sit down and you switch on your computer, open up the dashboard, and you scan within a couple of minutes for the most interesting setups for the next day. And this is an activity that you not only can do on Sunday, but basically on every single weekday, because our dashboard will update every single day after the market close. So every day there will be interesting setups. And if you have followed the markets, you may be aware that we have witnessed what is completely normal, by the way, a bit of a correction on Friday. So the job data have been released, the non-farm payroll data and the job data came weaker than expected. The market went down. And we've warned from this and we've said, hey, things are really extended right now. Maybe be careful with your long positions. And because a correction may be coming, we didn't know when it would be coming, but we would know that it will be coming at some point. So we've seen the beginning of such a correction today. I believe, that's my personal view, of course, it will be a short-lived one. So why this is can be explained from several technical factors. But for those of you who are very after a correction, oh my God, my positions are down, my portfolio is down a couple of percent. Well, don't worry, because this is the opportunity where you should act and perhaps add to your position. As Winston Churchill said, of course, within a completely different context, never let a good crisis go to waste. I'm not saying we are in a crisis, not at all, but in this case, never let a good correction go to waste, because now is the time to potentially load the wagon to add some positions. Yeah? Not when things are overextended, when things come down a bit, this is when you want to act. So how we can find these good opportunities, we're going to discover together today. A real quick introduction for those of you who don't know us. We are tradingindicators.com. My name is Daniel here on the left-hand side, and together with Homa, my partner in crime, we have created Trading Indicators about 10 years ago. And in fact, we are nearing our 10 years anniversary. Very soon there will be a special event for this as well. So this is going to come out a bit later this year. And about 5 years into our journey, Nicholas has joined us. And Nicholas is also in the room today. He's going to be manning the chat. So as our name suggests, we specialize on the creation of innovative trading indicators. We've done this for many, many years. You've seen it all. We've done this for many different platforms like TradingView, TradeStation, MT4, MT5, Modifwave, Thinkorswim, and so forth. So we have a lot of experience in building these indicators, but lately we have also started creating innovative trading scanners. And one such scanner we will be using today to find these swing trading opportunities. And as you'll see, it's actually a very straightforward process because it's based on what's called technical analysis. I'm 100% a believer that technical analysis is much, much simpler than fundamental analysis. We've seen this with a couple of earnings reports, which, in my opinion, came out quite positive, but the markets for these individual symbols, we'll have some examples later on, they actually went down. Why? Because the market priced in even more positive earnings, and trying to understand what is already priced in and what comes in as a true surprise, that is so complicated. This is why, for the most part, we stay away from fundamentals and base our analysis on technical analysis. All right. So one last thing, if you have any questions, guys, please make this webinar your own. Put all your questions into the Q&A box, whether it's going to be a symbol request or some foundational questions. Please put them in there, and we're going to get to those questions as this webinar proceeds. I also need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's go through a couple of housekeeping items, and then we're going to jump right into the markets. First off, if you have not watched our bootcamp yet, please watch it. It will cover all of the many features that we have built into the dashboard. And by the way, we will be releasing yet another new feature very soon in Aubrey. If you're there, of course you're there. You said you're there. This is thanks to you for the most part. So I'm going to give a little preview of this in just a bit later today. So please watch the bootcamp to understand what all the different features are. The link is right here. Also, if you have not joined our Discord community yet, please consider joining, because there we exchange, or you can exchange your trade ideas with our fellow traders of our community. And the more join our Discord community, the better it will be. Also, what we're going to be doing today is we will interactively scan for interesting setups using our Liquidity View dashboard. It really would be best, and it will give you the best experience if you follow along during this process. So if you don't have access to our dashboard yet, please consider getting a trial access, a 1-week trial access at tradingindicators.com/view. This will give you instant access. This will probably take maybe a minute to get you access. And once you're in, you can follow along interactively. All right. And two more things. We also have an ebook published called The Power of Three, where we further detail our three main setups: the bounce setup, the zone break setup, and the zone break retrace setup. If you want to know all about these setups, check out our ebook at tradingindicators/power of three. Also, this link is in the chat. And last but not least, if there's anything missing in the dashboard that you would like to see, please let us know what that is. Your feedback is what drives the further development of our dashboard. So the more suggestions we get, the better it will be. And one such suggestion by Aubrey, for example, I'm going to show you today a little preview of what this may look like very soon when we update our dashboard next week. All right. Now, let's get started. Market review. So what has happened in the market? I already gave it away a little bit. Just quickly go to our dashboard. There we go. is that we did see a bit of a retracement on Friday. So if I open up the SPY, this is the wrong dashboard. This is our staging site, which already has the new feature, and then I'm going to get to this in a second. So if we go to the SPY, there we go, and we open it up, I'm just change my background color to black here to have this a little bit more visible. All right, there we go. Okay, so what are we seeing here? Well, we can see that when the market came down on Fridays, we actually posted all-time highs, I believe, after some earnings announcement overnight on a Thursday, but then the market dropped off quite sharply. So we had many fundamental events happening this week. We had the interest rate decision on Wednesday, which basically they capped the interest rate at the same rate. Then we had PCE on Thursday, and then we had the job market data on Friday before the market opened. And I think at least two of them probably came back quite negative. So the market dropped off quite a bit. Nothing dramatic, but these corrections, you can see them here over and over again within a bull trend. They are completely normal. So this is not even a big correction. So if you quickly measure this one out from top to bottom, what is it? It's 3.12%. It's nothing. It's a very small correction. A completely healthy thing, something that happens all the time. Nonetheless, the markets came down. And where did they come down to? They broke above resistance here back in June. We went up relentlessly. We topped out. You can see it's been rounding out a little bit here. A classic pattern which kind of precedes oftentimes that prices may come down a little bit. So the rounding out here, and then we gap down, and now we're trading near this broken resistance level. And if you remember, this is our classic zone break retrace setup. Actually, it says it on our scanner as well. It's a long break or zone break retrace setup. Our prices are coming down back to the broken resistance level, which, because it was broken, now acts as support. And we see this as an interesting opportunity to potentially enter into a long position right now, but things actually came down a little bit. We're still above our averages. Don't get me wrong. It's still expensive. The air is still quite thin out there, but at least we came down a little bit after this huge bull run since April this year. So prices came down, and actually what I did on Friday, because also the VIX spiked up. Actually, let me give you some context on the VIX real quick. If I open up the VIX here, the volatility index, the implied volatility of the S&P 500 options with an expiration of about 1 month ahead. You can see the VIX spiked up to like 21. Nothing dramatic. Again, it's completely normal. This happens all the time. But at least it was not so low anymore, like 14 and 15. It spiked up a little bit. So what I've done is two things. First of all, I got rid of my calls on the VIX. I told you perhaps a couple of weeks ago, I bought some calls, 18 calls in the VIX, maybe about 4 weeks ago. They went up nicely, so I sold them, and that's closed out. I used that opportunity to get rid of these calls. Okay, that's the first thing I did, just to close out a position, because my view is that this is something temporary. Volatility, in my view, of course I might be wrong, in my opinion, might come down again. So I took this opportunity to get rid of my calls with small profits. So that's one thing I did. The second thing I did on Friday, yesterday, in fact, is I sold puts for the SPY. So I took an opportunity that volatility spiked up a little bit, so 22. At least it was above the average yesterday, so that made the puts a bit more expensive, and I sold them. I went short with some cash secure puts on the SPY in the expectation of three different things. First off, I think volatility is going to come down again, and the puts will lose value because of this. Secondly, I believe we are near support down here. We may go down a little bit further, but eventually this uptrend is going to resume. That's my second assumption. And thirdly, these puts, well, we also have a gap to fill here, by the way, which in order to test this gap, prices need to go up as well. And then also, I decided to sell puts with expiration of about a month, so 30 days, give or take. There will be time decay working in my favor, making these puts a bit cheaper over time. So this is what I did on Friday. I jumped on this opportunity, and I decided to sell puts instead of buying calls because puts or price of options went up. If you sell off options, you want to sell high and buy low. So prices or options prices gave room for this particular strategy. Okay, so this is what's happening in the SPY. I think this correction is completely normal. We might come down a little bit further, but I think this overarching uptrend is going to continue. All right. Then we also have the Qs. So the Qs are pretty much a mirror image of the SPY, as you can see it here. Here's the same picture. The only difference is that, we also posted all-time highs on Thursday. Prices came down, then they gap to on Friday, and prices went further down. But the only difference to the SPY here is that we are still a bit further away from this broken resistance level. We broke above a resistance on June 25th. Prices went up, retraced. We're still a bit further away, and this is why our scanner, if you look at this value here, long break 26, it doesn't give us the long break retrace setup. It's still a long break setup because we are still a bit too far away for this to qualify for a long break retrace setup. But if you don't want to be too finicky about this, it's pretty much the same thing. Prices went up and corrected down a little bit. And this could also be an interesting opportunity to potentially consider some longs here in the QQQs. All right, gold. Gold also, stocks went down, gold went up. Oftentimes these two are inversely correlated. And that's exactly what we saw on Friday as well. So in fact, just to give you a little overview of my portfolio, I bought some gold calls on, I believe, July 28 with a fairly long expiration. I think mid-September, maybe end of September expiration. And these were out of the money calls. I believe it was strike price of maybe 310, 309, something like this. And my idea was, okay, prices came down towards this first, and just do one quick thing. Hang on. I changed the default settings of MA Rush. Let me just put this back. There we go. Okay, so prices came down to this first MA Rush level. So you can see it here. This happened many times before in the past, but prices came down to this green line here of MA Rush. So this happened, if you look at the past in gold, many times, like here, here again, many times in the past. And every time this happened, we saw a fairly quick correction to the upside. So I decided, all right, rinse and repeat, as we may say. Prices came down once again to this green line. I bought some calls here, out of the money calls, in the expectation that prices would recover from this correction. We came off our all-time highs here. I decided to buy calls because volatility of the symbol was very low. So when I bought them, it was below average, which makes buying calls instead of selling puts the more appealing strategy, in my view. I also thought, I want to reduce my risk. So in this case, who knows if there will be a bigger correction in gold coming. It's possible. If it comes, I don't want to be stuck with this contract. I want to be out of it. So calls where I can only lose the premium was the right play in my book. So prices went down a little bit further, but on Friday they spiked up, and these calls are nicely in profit. Now I believe prices will continue to test once again this all-time high, and I'm going to keep these calls for a bit longer. As soon as we approach the all-time highs, I'm going to try to sell them as well. So gold is rebalancing after a bit of a deeper correction, coinciding with the support level here. Oil, United States Oil Fund. How does USO look like? Well, United States Oil Fund, I was getting excited. The setup didn't work up, didn't come yet, but I was getting excited when we broke above this intermediate resistance level. So, prices were fighting with this intermediate level. We came up there, we bounced down, came up, bounced down, came up again, bounced down. We finally broke this level, a big move up here on July 29. I was hoping maybe prices are going to go up all the way to a magic zone of 83. Why do I call this the magic zone? Watch this. So if I zoom out a little bit, what do we see here? It is basically, or has been, an impenetrable, a barrier, a strong barrier for prices to the upside. Every time prices came to this 83 level, and see it here, we have seen a sharp rebound. So I was hoping, all right, prices are going to come up one more time to this level, and then I would sell or buy puts again. In this case, I think selling calls would be too risky. Who knows what's going to happen? So buying puts for your risk is limited would probably be the better play here with an out of the money strike price, just like what we've done here When this happened, this was our trade of the week maybe a month ago. I would do the same thing in the expectation, okay, prices will bounce off one more time from this key level towards the middle, in between this support zone down here at 66 around and this key resistance level up here. But let's see what happens. Maybe we're going to see another leg further up in oil. All right, Bitcoin. All right, BTC USD. Let's have a quick look. Yes, so we said we're going to wait and let the market decide what's going to come next. If you remember our session from last week, we also said, hey, this was a flagging pattern. It's probably the ugliest flag you've ever seen. I drew this by hand. The flag post here, and then the actual flag here. These flagging formations, they can last for quite some time. So we've been in there, and I said also, if we break what we said, we discussed it together. If we break above this upper end of the flag, we may see an acceleration to the upside. If we break below, a retracement down to this former resistance level might be possible as well. So it looks to me right now, since we broke the bottom of it, we're going to see a retracement down to 108,000. At least that's my feel. On Bitcoin, let's see what the current live prices are doing. Of course, Bitcoin is trading over the weekend. You can see it's continuing a little bit further, now at 112,800. Yeah, and I think a retracement down to this level might be in the picture with Bitcoin, and then potentially we can look at some new longs there. But be careful right now to add to your position in Bitcoin until this has been resolved. We see some bottom in Bitcoin. All right. Okay, perfect. So that was our market review. And before we look at the setups for the next week, let's do a quick review of our setups of last week. Let's see what has happened. So I'm going to open our watch list, and you should have this watch list in your dropdown as well as a read-only shared watch list. It's called Setups 2025-07-26. So let's have a look. I'm going to start with something which you may find difficult to see, but I think we have to sometimes also just be honest about it. Arthur J. Gallagher, not unfortunately, I think it's still an interesting one, but unfortunately in the sense that it corrected deeper than I expected. So we said, okay, Arthur J. Gallagher, a monster of a stock. It's been in a very consistent uptrend for quite some time. Was correcting down to this key support level, which we thought, okay, this could be an interesting long entry opportunity. Well, it didn't last. That the stock went below this level, and now it found a bottom at this support level here at around 275. So what to do if you're in this trade? So I personally, I'm not in this trade. But if you're in this trade, what would you do? So I think I definitely would stay in this trade. I would not close it out. I think this could be just a correction, a deeper correction than expected within this bullish trend. And if you just measure this one out, it's going to give you some context here. This correction, let's see, from this all-time high here down to this level, is about 21%. All right, it's deeper than I thought it would be. But if we look at the past, at some of the corrections that we see here, they look smaller because prices were lower. But if you look at these corrections, you will see that actually these past corrections, sorry for jumping around, just fine. Let's say this one here, they actually had a similar dimension. From here, all-time high down here. How big is this? 14%. Okay, well, this one was smaller, but I thought I saw some other ones here in the past where we definitely had some similar corrections in the past. So this is not something completely unusual, like 20% here, of this particular stock. So I think if you are in this trade, I personally would wait it out. Let's see what happens if this support level holds. We also do have a liquidity capture down here. And then, we may see a recovery from this level towards higher levels. If you are not in this stock, I think this could be a great opportunity to get in right now at a much better entry price. I definitely will consider this on Monday when the market opens, either with call options or potentially also with selling some puts, depending on what the prices for the options are. Okay, so this was Arthur J. Gallagher. Cheniere Energy, another trade that we had. This one has worked out nicely. Here we were bouncing off, we're playing the bounce off the support level. You can see prices bounced off really nicely from this level towards 238 now. Now we're kind of already facing resistance up here. So if you are in this bounce trade, maybe consider booking some profits at this point. German Stock Exchange, Deutsche Börse. Not much has happened here. It found support here. Prices have held, so we're in our entry zone. So now the expectation is that prices will bounce off this level. Marsh and McLennan, same industry and sector as Arthur J. Gallagher. I think the whole industry went down as such. You can see it here. Big correction here as well. And I warned you also on last weekend, don't double dip. Don't invest into both. Pick one or the other. Because if you have double dip, then two of these stocks would be down right now. There's probably something which you didn't want. So it's always important to diversify. All right. O'Reilly Automotive. Looking good so far. Here we were looking for the entry. I didn't quite get it. Waiting for a bit of a retracement down here. Prices came down a little bit. Now trading higher after the zone break from July 23rd. That's looking good. SAP looking also all right, I think. A bit of a deeper correction. I still like it. We can see here the second MA rush line is right where prices are. We are also not completely below the support level yet. I still like this one for a long entry within a very stable uptrend of SAP. You can see it here. For as far as this history goes, every single pullback has been constrained to only level 4. So all these little red patches here, they only go down 4 rows. We call this a level 4 pullback. And well, except for this little exception here, during the crash with the tariffs, we had a level 5 pullback. But every single time this happened, we shortly retraced back to the upside. So this is looking good. And last but not least, Sprouts Farmers Markets. I like it. I sold some puts here as well. This is a monster of a stock. I love this uptrend. Look at this very stable uptrend of Sprouts Farmers Markets. What I did here is I sold some puts on, I believe that was Wednesday. Why sold some puts? Because also volatility was quite high because they had earnings the next day. So that expectation of earnings and the increase of volatility was already priced in on Wednesday. I could see that prices of the puts were quite high. I sold them as cash secured puts with a strike price of around 157, I believe. Prices then came down a little bit after earnings. Even though earnings were very positive, they exceeded expectations. Yet prices went down because the market actually had another expectation priced in of even higher earnings. This is why I said in the very beginning, it is so difficult to try to estimate what an earnings report or other fundamental news will actually do to the market. So even good earnings, can lead to a down candle, which we saw on Thursday, and prices recovered on Friday a little bit. And interestingly, my puts with a strike price of, at the time, I think, at 157, something like this, they are currently positive. So I sold them, prices went down. So you'd expect that this trade now has a negative P&L right now because prices went down. It actually is positive. Why is that? Because I sold them at a very high price. With this upcoming volatility, with the earnings already priced in, a bit of time decay, and lower volatility on Friday. So even if market prices are lower, these puts actually lost some value. And that's the beauty of stocks, of selling puts. If you sell them at the right time, even if the market goes against you to some degree, they can still be positive. All right. So far so good. I think the only big ones which require some additional attention are Arthur J. Gallagher and MMC. The other ones were pretty much spot on. All right. So moving on. Now let's, of course, we're trying to find some setups for the week ahead. So I'm going to go back to my slides real quick, and we're going to get to all these questions in a bit. I see some Arthur J. Gallagher. Well, she said, yeah, he lost on Arthur J. Gallagher. Well, it's part of the game. And of course, the idea is that not every trade can be a winner. Just make sure you position size properly, and that if you have a loser, it will not wipe out your portfolio. All right. Yeah, is there any way to confirm a sector? Yeah, we can. Actually, you know what, guys? Let me stay with Arthur J. Gallagher just for a second real quick. And I'm going to switch over to our staging site here. This is a version of the dashboard which is not available to the public yet, but it will become available quite soon. So what we've added here is something really cool. In our sector column, it shows you what the sector is, but we have added, and thanks to Aubrey for this, we have added some additional information to it. Now you can see, okay, what is the sector ETF of that sector? So for this particular, let's actually pick some a more known symbol, like for Agilent. What's the sector ETF? Oh, well, it's in healthcare. The sector ETF is XLV. Okay. You can also see, okay, what's the trend of the sector ETF? It's a downtrend since 71 trading days, as per our MA Rush indicator. And what's the technical setup? Right now, it's in a magnet zone, meaning prices of that sector of XLV is pretty much in the middle, in between support and resistance. And we click on it, this is clickable, the chart will open up the sector ETF. There we go. And we can see, all right, we are in a downtrend. All right. We are somewhat in the middle, prices are right here, between support and resistance. So this gives you some extra context. It's just, a little shorthand of evaluating even quicker of whether a trade might be of interest. So now if we go to Arthur J. Gallagher, AGG, of this stock, there we go. We can see, okay, all right. So this is a stock in the financial services sector. The ETF is XLV. It's in an uptrend for 410 trading days, but we are facing resistance, short bounce. Maybe, hindsight is 2020. Maybe this could have given you some warnings. Probably not. It's still a very bullish sector, but at least you can now see what is the sector ETF doing. So we're facing resistance here. Maybe a deeper correction because of the sector, which gets the brakes are put on because of the sector is facing a technical level. Maybe this was partly responsible of this big downtrend of Arthur J. Gallagher, because I don't think it's a surprise that both MMC and Arthur J. Gallagher are going down at the same time. This is something that happened to the market as a general. It's not related to the individual stocks. This is something which is now becoming available in the production version as of next week. Yeah, and Van says these new features would be great to have. Yes, Van, it's coming. In fact, it's Saturday. We are a bit more relaxed today. The other thing I want to do too is, and this will take a bit longer, is I want to do the same thing, the same extra information about the sector also for the industry group. So maybe financial services is going up a lot, but perhaps for some reason insurances are suffering, which is a subgroup of the financial services sector. So I want to add the same information to the industry group as well, giving you even more context. But this will take a bit longer to complete because there's so many more industry groups than industry sectors. All right, and Lenny says, bravo for this new edition. Great. Yeah, Lenny, it's coming. It's probably going to be released on Monday or Tuesday. All right. Okay, so moving, I'm going to quickly see what's going on with Arthur J. Gallagher, if there are some questions. Yes, John, we looked at Arthur J. Gallagher. I personally would stay in. So if you're in the Arthur J. Gallagher trade, I would stay in that trade. I still think it's some bullish stock. This correction is deeper, okay, but it's not the first time this happens. We've seen similar correction in the past, and stocks have been rebounded afterwards. And if you're not in this stock, maybe now, since we're at this lower support level here, maybe now it's the time to get into it. All right, so that was that. All right, so now let's scan for some new setups. So what are these setups that we typically scan for, and what's our process? Well, first off, we're going to look at one setup at a time. Based on what we see, we're going to create a hot list, a watch list based on the most interesting ones, and then I'm going to add some trade notes to these symbols and further narrow down the ones that will look really interesting for the week ahead. All right, so the first that we're going to look at is our classic bounce setup. Ideally, a bounce setup should be considered if the stock is in a long-term uptrend. That's something we'd like to see. Okay, long-term uptrend, but it's taking a break within that long uptrend. It's correcting down. And ideally, it's correcting down to a key support level, as we can see it here. We're bullish. We're coming down to a key support level. And then the expectation is a bounce off this key support level. And as you can imagine, with this bigger correction right now in the markets, quite a few stocks are now in this bounce setups. So how can we find those? So I'm going to go, oops, wrong button. I'm going to go back to the dashboard. There we go. And actually, let's use this version here. Let's use the staging version with the extra information. So what we're going to do is we will be, first of all, focusing on bullish stocks. So in our MA Rush column here, which is our trend column, we will select the bullish filter. And once I click on it, and you know what, I'm going to actually go back to the live version, because here we also have some experimental symbols in there, which we are considering of adding. That's why the count is around 7,000. But some of these are actually not very liquid, so I don't want to give the wrong impression. So I'm going to go back to the actual version. So ME Rush should be bullish. We'll do this. I'm going back to our end of day scanner here. And once I do this, we can see that of our 5,000 stocks, give or take, right now 2,396 are bullish. So we filtered down 50% of these symbols, give or take. All right, so that's criteria number one. Criteria number two is we want to see a long bounce setup as per our liquidity IQ indicator, a setup where the stock currently is trading at a key support level. All right, let's do this. So I'm going to go here and enter long bounce. Okay, now we're down to 186 stocks. Yeah, and this is a large number. So typically when I do the same filtering, when market conditions are a bit more bullish, we see maybe, I don't know, 70 stocks or 80. Now we're 186. That's once again a bit of an evidence of a correction that we're going through right now. That's step number two. And step number three is I'm sorting by trend duration. I want to focus on stocks which have been in an uptrend for the longest first. So I'm going to click on this MA Rush column. You can see it here. And now I'm sorted from highest to lowest. And the first one that comes in is this one here. WW Granger, however it might be pronounced. Let me have a quick look what the stock is doing. All right. Operating products and services primarily in North America. What's the maintenance? Maintenance and repair. Okay. All right. And based out of Lake Forest, Illinois. All right, great. So that's what the stock is doing. We can see, okay, this stock has been in an uptrend for 1,288 trading days. So long-term bullish. Let's click on it. All right. Okay, what do we see? Well, I see a huge gap down here, but let me zoom out a little bit to see where this prices are come from. All right. So, because it may not be apparent from a small snapshot that the stock is actually bullish. All right, so if you go back a little bit, you can see it here. Yes, this stock is definitely bullish. No question about it. But after the all-time highs here in November last year, or from November last year, we retraced down all the way down to this key support level. And now after earnings, they had earnings coming out, I believe, on a Thursday night or perhaps Friday morning before the market opened, a big gap down all the way down to this support cluster here, around 892 and 875. All right, I like it for a bullish play because I believe this is a very strong uptrend. I think this gap here is screaming to get filled. And I also believe that this is a key support level, which has been tested a few times in the past. So to me, this could be really an interesting long opportunity because this long trend seems to be quite stable. It's a big correction after earnings, but these earnings gaps, they tend to get filled over time. So I think a very interesting candidate. I'm going to add this one to our watch list. So I'm going to create a new watch list. Going down here. All right. Setups. Colon 2025 0802. There we go. And the next thing I'm going to do is I'm going to share this watch list with you guys. And we agreed last week that I'm going to share always the last 5 watch lists with you. So that's going to be the 5th one to be shared next week. When I'm going to share the watch list, I'm going to remove the sharing here of the oldest watch list. So this should be appearing now in your dashboard as well. You may have to reload it for it. And we're going to add this symbol to this watch list. All right. Perfect. That's our first one to consider. Great. Next one, Coca-Cola Consolidated. That's a stock I've been talking about quite a few times in the past before. A nice one. I don't think it's optional, but it's definitely, or maybe it is, but it's not very liquid. Long-term uptrend. You can see it here. We came down to this key support level after all-time highs. We called out a bounce setup back then. It played out beautifully, became all the way back towards the middle, in between support and resistance, and now prices once again are coming down to this key support level. I would love to see prices coming down a bit further, maybe really close to this level here, and then give it a shot also for the long direction. So this is very much in play as well. But here I would like to wait a bit until prices come down a bit further. So I'm gonna, not add this stock to our watch list. All right. Okay, next one, Northeast Community Bank Corp. In financial services in regional banking. Oh, I like this one too. Look at this one. Yeah, big move up all the way to 31 here, because that's a cheaper stock, and a huge correction. And that's a correction of how much? Let me just measure this out real quick. From the all-time highs all the way down here, correction of 37%. All right, but down to a key support level with a liquidity capture here. I also think that this one could be an interesting long play, especially since it's a long-term bullish stock. Deeper correction, but we are right at the support levels. And if you want to give it a shot, perhaps with call options or maybe selling some puts, if you want to, not so relatively, cheap stock, your risk will be limited if you only limit yourself to like 1 or 2 contracts. It could be an interesting stock as well. So I'm going to add this one to our watch list. All right. Next one, Steel Dynamics Inc. And basic materials in steel. Let's have a look. All right. This one, I'm going to skip it. You may already guess why I would skip this one. First of all, it's an uptrend, which is nice, but it's super volatile. Look at these big moves in here, and we are nowhere near the lowest level of support. This is an intermediate level of support. I don't have too much faith this is going to hold. We're kind of pretty much right smack down the middle, in between these two key levels here, all the way up here and here. I would like to take a shot at stocks where we're at the lower end of things, not at the intermediate level. So I'm going to skip this one. Aflac, a stock that we had on our radar for quite some time. And Lenny is asking, do you believe in seasonality of the market? Absolutely, 100%. And this is something which we will be adding to our dashboards very shortly. And we're actually working on this right now. Quick detour on this one. If you now scroll back in your dashboard, and you'll see it, you can scroll back much, much further than you used to. It used to be capped out, I believe by 2019 was the last data point that you had. Now you can go back years further. And guess what, Lanny? That's already in preparation of getting seasonality statistics, because these need to be calculated and evaluated over longer periods of time. That's the first step towards this. So we have much more historical data so that we can create meaningful seasonal statistics that will be added to the dashboard very soon, probably in the beginning of fall. Yeah. So you can imagine it's a bit more complicated to do all these calculations. Then we have to also pick the right ones and maybe show some interesting graphics and filters for it, but that's going to come absolutely very soon. So yes, we believe in seasonalities. Okay, so back here to Aflac. All right, it's consolidating. It's definitely in a sideways trend to some degree here. It's really at the lower end of this support level. So if I were to trade this one, I would potentially consider a long position here, but my stop loss at the most would probably be here at 94 or something. So if we lose this level, we may see a much deeper dip down, and I would not be willing to stay in this trade for that much of a correction. But yeah, but now would be the time to give it a shot. Prices are really close to this lower end of support. Maybe with a small position size, take a shot. If it works out, great. If not, you would only risk a little bit. Or perhaps call options could be another play to consider here. I'm going to add this one as well to our list because I'm curious to see what's going to happen. All right, Post Holdings. All right. Yeah, we also discussed this one. It's also hanging in there at this key support level. Post Holdings, bullish for 1,042 trading days. Similar to Aflac. Yeah, if you want to give it a shot, now would be the time. There are some intermediate levels below this, so where prices could go. So perhaps a stop loss of, maybe if you want to give it a bit more room at 97, could be a good idea here. So I'm going to add this one as well to our list. All right. I have to be a bit more selective here because there's so many other ones that are still possible. Tanger Inc. Tanger. Inc. in real estate. It's a REIT. All right, what are we seeing here? I'm gonna take down this weird channel. I forgot when I drew this channel here, maybe a while back. I don't know. So I'm gonna hide this one for a second. What do we see here? Well, also here, a very bullish stock. Saw some volatility in between and some sideways consolidations. You can see it here in this phase here from 2021 until 2023. Kind of, it was in some sort of sideways consolidation. It seems to me that once again we are entering into a sideways consolidation of the stock here. I can imagine, take this one off here. I'm not sure when I drew this one. I can imagine that we are now at the lower end of the sideways channel. And if you believe this is a long-term uptrending stock, maybe now could be an interesting opportunity to take a long position here. Especially if you come down perhaps a little bit lower, maybe see a liquidity capture like we saw here, we could anticipate a bounce off this level towards the middle in between support and resistance. I'm going to add this one as well. And perhaps one more, just because I'm personally in this one. I'm going to skip these ones, even though they also look nicely like Unum. Okay, I'm not going to skip it. This one has a great earnings gap here. I believe it was earnings towards the lower end of this channel. We saw a gap like this before. These gaps tend to be filled. This is a massive gap, by the way, all the way from resistance down to support. Huge gap. But, if you want to take a shot and want to get into a stock at a discount, maybe now would be the time. Right down to the support level, we see a liquidity capture, move a small position size to anticipate at least that this gap will be narrowed in an attempt to test it. I'm going to add this one as well. And one more, just Sprouts Farmers Markets, a stock that I'm personally in. I love this stock. It's such a stable uptrend. I mean, look at this one. It can't get much smoother than this one. Of course, the swings here seem to be bigger than down here, but that's because prices are much higher. Like down here, and prices are like at 43. These swings here, they look very small, but back then, trust me, if I go here and zoom this properly, they look much bigger because it's all a measure of scale, right? Now prices are much higher. These swings look much bigger. So here we are at the lower end of the swing. And as I mentioned before, I sold some puts here in the anticipation that we're going to call one more time, at least towards the middle in between support and resistance. And even if I get assigned the stock, I believe in that one. I don't mind owning it if I get assigned, if my puts, if the stock at expiration should be below my strike price of around 157. All right. Yeah, maybe there's more downside movement, but this was due to earnings. Oops, what happened? This was due to earnings. See this big candle. If you discount this a little bit, and this kind of still closed, at least within that zone, I still think it's a strong support level because, well, if we lose this one, I think the next one would be really far below, which can be a good thing. So oftentimes, if this is the last stop or support level of significance, it typically has a lot of strength in it. So that's my view on it. It's a very stable uptrend. Level 4 pullback on trend radar. And as far as my eye goes here, look at this one here. The last level 5 pullback was down in 2022. In the meantime, only level 4s. It happens sometimes. So even these corrections here, they're quite sizable. But we recovered every single time. And I believe this might be possible. Well, I'm hoping it'll be possible for this correction here as well. All right, so I'm going to add this one also to our list. All right. Okay. Now, moving on. The next setup I'd like to discuss is our zone break retrace setup. I'm going to go back to my slides. I'm going to skip the zone break for now. It's an interesting one, but I think more interesting is even the zone break retrace setup. This one here, where prices went above resistance. You can see it here. We broke resistance. We initially go up, but then we correct down. We retrace down to the broken resistance level, which is now acting as support. And then this acts as a launch pad for another move higher. So let's see what symbols we find with this setup. So back to the scanner. I'm going to clean out all our filters. You can see it here. And I'm going to go to long break retrace. So now we only have 46 stocks within From our 5,000 stocks, only 46 are in that setup. It's very selective. And I also want to focus only on bullish stocks. I'm going to filter out a few of them. Then we're down at 42. The first one that comes in is, some really interesting one. And note here the SPY is also there, all the way at the bottom of our list. Okay, the first one is CBOE. All right, the exchange. Let's have a look. Okay, so what happened here? Okay, definitely very bullish for thousands of trading days. We broke above resistance, came down a little bit, and I'm not sure why this qualifies as zone break retrace. Maybe we are technically still in the vicinity of this broken level, but to me, I need to see prices to come down further towards this broken resistance level. If we do, this can be an interesting long entry opportunity, but well, too extended still for my taste here. RBC Bearings Incorporated. I wonder if that's related to the RBC Bank. Probably not. Okay. Yeah, similar here. Maybe I should fine tune this setup a little bit. We actually did come down on Friday. That's why I was picked up down to this resistance level. We wicked down in there. Then we jumped up right afterwards again. All right. So that's why this qualified. Right now, unfortunately, also the same story here. We are a bit too far away. So I'm going to skip this one as well. If anything, we want to wait for a retracement down to this level. Caterpillar. All right. Okay. Oh, that's more interesting. So Caterpillar is bullish for 675 trading days. Of course, it suffered a little bit during the tariff conflict, as I may call it. But now it completely recovered. It went above its resistance level, went up, and now further down, down to this broken resistance level, which is now acting as support at 419 here. I still would be a little bit careful. You know why? Because we are still so far away from these MA rush levels here. So prices are still very, very much extended. That move from here has been quite parabolic. Prices went up really, really fast. So I would be a little bit careful with this one. So I'm actually going to skip this one as well. Too expensive right now. Maybe we're going to see a bit of a deeper correction, and then this could be a right time to enter. UBS. All right, in financial service in the bank. Oh, this looks better. Look at this one here. So if you want to do a banking play, I think it's either going to be UBS or we'll see is JP Morgan, which is also of interest right now. So here in the financial sector, you can see it here. Nice stable uptrend. Yeah, all-time highs on earlier this month or 2 weeks ago, and then the retracement with a couple of gaps down there. It's a very gappy stock. You can see it here, lots of gaps, but this could be an interesting long opportunity for a zone break retrace trade. Yeah, ideally, I mean, in an ideal case, I like to see this upwards move a bit further up, then come down to this level. Here, we went up really quickly for a week and then down right away afterwards. But nonetheless, I like this one for a potential long. So I'm going to add my entry zone here, potentially, entering here, depending on where the market opens in the long direction for another attempt at an all-time high. And we also have a couple of gaps here to fill to the upside. All right. This one. Okay, I'm going to skip these. You can click on these yourselves here. SGI. We can't have too many stocks in our watch list, even though this looks interesting too. What is this stock? Somni Group International Inc. Furnishing fixtures and appliances. A quick look what this one does. Based out of Lexington, Kentucky. Wow, it's an old school company. Okay, yeah. Appliances. Okay, great. Let me just quickly look. Now I'm tempted. I never heard about this one before. Let's see, where are we coming from? Yeah, it's grinding higher for sure. All-time highs, zone break, then the retracement here went up again and now down to this level. So also here, I think it could be an interesting one to enter long around this level. If we come down to this level one more time, perhaps with a small position in the anticipation that, we may bounce off this broken resistance level, now acting as support to higher levels. All right, but the stock I really wanted to show you is this one down here, and then also our SPY position here. This one, JP Morgan. So JP Morgan, I like it. You know why? First off, it gave me good luck in the past. Secondly, it's a very stable uptrend, probably the strongest of the banks out there. JP Morgan, the Cadillac of the banks. And it worked out nicely for us in the past. You can see it here. We entered or it was our trade of the week a couple of weeks ago, where we suggested a long trade JP Morgan at this level, zone break retrace. Prices went up nicely afterwards, posted all-time highs, but now once again we are lower with a gap on Friday. And I believe if we come down to this resistance level, this could be an interesting long entry as well. So I'm definitely going to add this one to our hot list. All right. Perfect. Okay. Aubrey says JPM is a core holding for you. Yeah. Well, I got rid of my my puts, my short puts already. I'm just collecting the premium, but I'm considering adding more puts potentially or selling more puts on Monday when the market opens, depending on what the volatility is. All right. Perfect. So now let me quickly actually I'm going to do one more thing here, SPY, because also it's a long break retrace setup. And this is something I need to fix with the dashboard. Sometimes it times out. And what you need to do, if you see this, by the way, this is a bug we have to work on, is you simply have to reload the dashboard and it will work again. A small bug that we have introduced at some point. So let me just go back here to our Zoom brick SPY setup. There we go. Oops. All right. So this is yeah, nice retracement down to the support level, former resistance level. I believe this can be an interesting opportunity for another long entry, especially if prices perhaps come down a little bit further. Yeah. If you look at this closely, there's still a bit of room to go. That's the SPY, it's the S&P 500s. I think even if prices go further down, if you just hold your position, at some point it's going to recover. And you're going to be positive. That has happened every single time so far. So there's literally something, not much that can go wrong with this particular index here. If you're willing to hold on to it, even through deeper corrections. We're going to add this one as well to our setup. All right, a quick review. So what are the stocks in our watch list right now? So I'm going to open it up, and we do have quite a few there. We have 11 stocks. I'm going to go through these very quickly to find the most interesting ones. Okay, WW Granger. Long bounce setup. I like it. I think this gap is like to get tested and close to this earnings gap. So I'm going to add this one to our watch list. But wait, but before I do, maybe let me draw my entry zone somewhere around here. If prices come down a little bit further, I would like to potentially maybe buy some calls depending on the price, or maybe sell some puts at this point. So I'm going to add this one to our list. All right. There we go. Let's go. Okay, perfect. Northeast Community Bank Corp. Yeah, another one. Here, it feels to me that we're catching a falling knife. It's like multiple days is grinding lower. I'm going to be careful with this one. I want to see some evidence first that prices are actually stopping at this level instead of buying it blindly here. So here, I'm going to stay on the sidelines. If we see some kind of bottom forming here and some sort of bounce happening, then we may reconsider this. Affleck. Yeah, at this, I mean, if anything, a small position here, maybe a call with limited risk at this point here, betting on the fact, okay, in this strong uptrend, this was a deep correction, but we're going to see a bounce towards the middle. So I'm still going to keep this one on our radar. It's been on our radar quite a few times before, so we're going to add another trade note right here. Oops, wrong button. There we go. Okay. Post Holdings. Yeah, I like it too. I mean, it's really at this key support level. It's just a little bit too bouncy for me. It's like and be grinding lower highs here and a couple of lower lows. I'm gonna also wait here to see what's happening. So I'm gonna skip this one as a concrete trade idea. And I also don't want to overdo it with all these strong bounce setups here where prices came down quite a bit. But I'm gonna skip this one. Tanger, real estate, a REIT. I like this one. I think we considered this one a few times in the past before. If we come down a little bit further towards this level here, maybe see a liquidity capture, then this could be a nice entry as well. So I'm going to add this one to our trade notes. All right. Perfect. All right. Unum Group. Yeah, big gap to be filled here. What a gap that was. It's a nice stock to see, a nice uptrend. I like it too. Yeah, if you want to give this one a shot at this level down here, and here's some call options. If they work out, great. If not, you only lose the premium. This could be the time. So yeah, I like it too. I'm gonna add this one as well to our list. We actually had this one back here in April already. I don't know what happened then. Let me just quickly go back to April to see, just for the fun of it. Yeah, it was right here. Yeah, worked out beautifully off this level. Maybe you're gonna see the same setup once again. Let's add this one here to our list. All right. Sprouts Farmers Markets, of course. Even though Lenny says he is skeptical, I like it. I was gonna keep it. I think it's just such a reliable, strong uptrend. Oops, wrong picture. Add one here, and there we go. I still like it for a long there. And even if I get assigned, I think I'm gonna stick with that stock otherwise. All right, UPS Group. Yeah, I'm gonna skip this one. If you do banking, I think I'm gonna go with JP Morgan down here. Aubrey says it's one of his core holdings. I like it too. So if prices come down a little bit further, I'm gonna potentially looking at selling some puts again at this level. So I'm gonna add this one as well. That worked out nicely. Here's our previous entry when prices came down. It was a winner. So let's do this once again. Rinse and repeat, as one may say. And two more, SGI Group International. Let's have a quick look. Yeah. I think I'm going to skip this one too. I have a feeling this correction might come down a little bit further, not stopping here at this broken resistance level. So I'm going to skip this one. And then SPY, I have to take it here. Let me hide these drawings. So I think if prices come down a bit further, it's not unlikely we're going to see a nice bounce off this broken level. So I'm going to add this one as well. All right, perfect. Whew, that was a long set of setups today, but hopefully some inspiration for you out there. And Aubrey says August 4th, there's some earnings for SKT for Tanger. Okay, that's good to know. So keep an eye out for this on Monday. I believe that's Monday. Earnings are coming out. So I'm not sure when these earnings will be published, maybe before the market opens. If it's after the market, then potentially wait until these earnings are out and then, place your trades afterwards. Thanks, Aubrey, for this. Perfect. So, Nicholas, are you there? Are there any questions at this point? I believe there might be some questions
Yeah,
out
there's
there.
a lot of stuff. So let's go through the symbol requests, and while we're doing them, we can answer the questions.
All right, let's do it. Yeah.
So the first symbol from Devendra is AMD.
Yeah.
And apparently he wants to know, or she wants to know, how to play the AMD earnings that I guess are coming up.
Okay, let's have a look.
At
Earnings
the same time, Daniel, do you have any idea? Does August normally tend to be bullish or bearish?
I think that this phase now that we're entering in August, September, and October, from a seasonality point of view, are rather weaker months. So yeah, be careful of this. But of course, that's seasonality. It's just something what happened in the past. It may not happen again. But technically, oftentimes they're a bit weaker than the remaining months. Yeah. Okay. Yeah, AMD. How did the earnings play? I mean, let's just see where we are right now. We are definitely at a key resistance level, which I think could be in our advantage right now because maybe who knows if it is, but we are at this key resistance level. Prices may bounce off from it or break it thanks to earnings. So earnings are coming out on Tuesday. So I think if it's still affordable, you have to look at the option prices. Maybe a strangle could be the play here. My feeling tells me on Monday these strangle prices will be very expensive because earnings are already priced in. This is something that you probably should have set up a bit earlier before the earnings. But a strangle is a play that, if prices move either to the upside or the downside, as long as it moves, you're going to benefit. Right now, I think it's too late to set up the strangle because they're going to be too expensive. If not, if they're reasonable, maybe that's the way to go with two out of the money options, one out of the money call and one out of the money put. If it's still reasonable, you're hoping for a big jump of earnings. If this happens, you will benefit from it. So that would be one way to play this. All right.
Thanks, Daniel. Okay. The next symbol is from Lenny. It's going to be FWRD. He said,
FWRD,
yeah.
Forward Air Corporation.
And he says, um, not as an investment or a trade to take, but maybe as an educational explanation of what you think the chart is showing us, because he was intrigued by the stair-stepping bullish
The
pattern, which I guess is
bullish.
happening in the near term. I'm assuming.
Yeah, to me this looks bearish, Lenny. If I mean this is a bearish uptrend, bearish, bearish down, a bearish trend, going down. Now we are in a sideways consolidation here, but the overarching trend is still bearish. And I would imagine if we this could act as resistance, see we're kind of in the middle in between resistance and support down here. Uh, yeah, I would more inclined to see this as a bearish example, Lenny,
I
because
would,
we are bearish. Yeah,
I think, yeah, he's probably referencing like the last 3 months or something where it's
yeah.
been kind of grinding up there. But that could just be a consolidation, like Daniel's saying there. Would wait to get till it gets to the resistance to see what happens.
I think so. Yeah, and here I would not act at all. We're kind of a no man's land between resistance here and support. I like to trade at the extremes because that's where you get much better reward to risk ratios.
Perfect. Okay. Gerald says still looking forward to the implied volatility of some sort.
Yeah.
Um, Greg says, Daniel, I hope you remember my idea for TI matrix upgrade from Greg Burns.
Yes, potentially yes. And Greg, maybe remind me real quick by email. We've received quite a few suggestions for TI matrix, but I'm not sure which one was yours in particular. But maybe either send a quick note here or ideally by email to remind me what that is.
Perfect. And Daniel, could you please now go for Greg to TSSI? And at the same time,
TSSI.
yeah, TSSI. At
We
the
don't
same
have
time,
it.
I'll answer this question from David. He says, how close does the candle above need to be in a zone break to trigger a zone break retrace? Is it ATR based? Yes, it is. I believe it's 2 ATRs, and it's configurable in the settings of the indicator. And
Yeah.
Van wants to know, Daniel, before you continue on TSSI,
Mhm.
what was your SPY put level at 30-day? Do you pick based on delta or your indicator levels?
Yeah, so because I'm when I sell puts, first off, it's a great question. So let me address this first before we go to TSSI. So when I sell puts, I believe in that symbol. So I believe in the S&P 500s. I think over time it will go up for sure. I have no doubt in my mind about this at all. So I believe in it, and it's always going to be a cash secure put. So even if I get assigned, I'm just going to wait it out until they go back into positive and I'll sell it. So I always make sure I have enough cash in my account that if I get assigned, I need to have $62,000 in the account to buy 100 shares of this ETF. That'd be fine for me. And giving these two parameters that I use for my trading when it comes to selling puts, I typically sell Delta 50 puts right at the money because then premiums are fairly high. I don't like to sell them in the money that much because then I don't get much premium. So I believe in this trend. I believe in my technical analysis. I believe in my technical forecast that this move will continue to the upside. Therefore, Delta 50 is good with me. If you have more doubts or want more buffer, maybe go to Delta 30 or Delta 20, more on the money. But I personally, it's Delta 50. So my strike price here, I believe, is 621 or perhaps 622.
Perfect.
Yeah.
Thank you, Daniel.
Mhm.
Okay, so this one, Greg says long at the break around 32 with a stop of 23.3.
Long right now for TSSI.
Long break around 32.
Yeah, it could be. I mean, it was just very extended. If you look at this one here, this move is super parabolic. It's not a stock that I would personally trade. I'm just worried about these deep corrections that could come. You can see how this correction came all the way down to this first MA rush line. Now we're far away again. If you get a break, we're even going to be further away from this level. So I personally would rather wait for this kind of correction than potentially enter long. But that's two different ways of trading. There's also not much historical data available here, which are in the neighborhood where prices are right now. It was a penny stock about 2 years ago. Now it's at much higher level, so it's a bit hard to say. from a technical point of view. I think that's more a stock which has, when you have some insights into the fundamentals, which will help you there.
Thanks, Daniel. And the next symbol is going to be from Gautam TSN.
Yeah.
And Gerald, I can answer this one. What determines when an older support or resistance is terminated? It's just the passage of time or the development of a more recent level. Those are the two conditions. The passage of time rarely happens. Usually a new level from that time frame comes in and it takes precedence over the past level.
Yeah, exactly. Tyson Foods, okay, TSN. Yeah, it went bearish a couple of months ago. We lost support here. I don't see any other support level below. So to me, from a technical point of view, the outlook would be for another drop further down. It's not a stock that I would trade. I don't like to short stocks to begin with. But yeah, from a technical point of view, we may see a move towards this lower support level here. Of course, there might be some corrections in between, but that's what this technical outlook tells me. All right.
Thank you, Daniel. Okay. The next symbol, Lenny says bravo on the new features, and Van says the same thing. Thank you for showing them. Aubrey as well. Okay, the next symbol, SFM. Are we at support? It looks like there's more downward movement. And Moshe said, have you heard about the SE? I didn't hear about that. That's super, that's game changing. Have you heard about the pattern day trading rule potentially being reduced from 25,000 minimum to 2,000?
Oh, I have not. Pattern day trading, is that applying for futures as well? I believe not. No, I'm not sure. No, I have not heard about this and what the implications of that might be.
Used
Yeah.
to prevent basically most working class younger people or a lot of
Oh.
people from day trading at all because they needed to have
Ah,
25,000 US in their account minimum balance just to be allowed to day trade.
got it, got it. Okay, that's the balance that you have to have in your account. Okay, yeah, it's definitely something that yeah, would make day trading much more accessible. Absolutely. How this would affect swing trades like this, probably it would not, but definitely exchanges facilitating day trading,
I
futures day trading. I think they could benefit greatly from that. More
th
commission will come in.
Perhaps once that rule drops, it could be similar to when everybody got their COVID payouts when all the money started flowing into the market and causing volatility.
Yeah, potentially. Yeah. So for sports performance markets, I think we are still in the vicinity of the support level. That's my take here. This was an earnings candle, a bit bigger, but it closed at least in the vicinity, even after this wicking down. So I think we're still okay. My view.
Perfect. Okay. Aubrey commented on SFM saying, you wonder who's shorting it. There's a pretty high short interest. Well, I'm not sure how high that is, but 8.5%. Um,
That is maybe if people think that it's extend. No, yeah, I wonder that too. Let me see, 8.5%. Whatever. Yeah.
and you had looked at SKT before, right, Daniel?
Yeah, Tanger markets, this
Okay.
Tanger.
Aubrey was just saying
They have
earnings
earnings
on the
coming up.
4th, so on
Yes.
Monday
Hmm.
for that symbol. Um, the next request is CME.
CME, okay. Financial services, data and oh, CME, of course, that's the Chicago Mercantile Exchange. Yeah, it's such a weird pattern here. I mean, the whole history of that stock lately, yeah, like up, down, almost like alternating. Hitting a resistance here. Long-term uptrend, of course, for 600 something trading days, 494 trading days, but hitting resistance here. I'll be careful. We may see a drop of this resistance level. I was at a liquidity capture here. So definitely not a long right now. If you clear it, this could be a potential long, but right now, I'd rather be careful. We may see a bounce of this resistance level to the downside.
Thank you. The next one is RKLB from Frank. RK like kick,
RKLB.
LB. Yeah.
Rocket Lab. Yeah, we just added this recently. Because I think Chris Copping, I don't know if he's in the room. Hey, Chris, if you're there, just quickly see, is he there? No. Yeah, he suggested to edit. We've now edited it. Yeah, it's it's a very bullish stock. I'd love this stock to come down a little bit to this level here. If it does, closer to the averages, this could be a long for me. Right now, this is my conservative set. I would wait. This is too extended for me, too expensive right now to enter long here. Seems like almost chasing this trend up. Even though we had a bit of a correction, I think this could go a bit further down, in my view.
Thank you. Okay. And then the next one is going to be Ethereum. And how do you think it compares to Bitcoin?
We can have a look. Let's check out Ethereum. ETH. How do we spell it? There we go. Okay. Yeah, let's have a look. I mean, to some degree, it is a stock which is not as extended as Bitcoin was. It's facing resistance up here. And if I overlay Bitcoin over it, let's have a quick look. BTC USD. I'm gonna hide. Oops, there we go. I'm gonna hide the indicators for a second here so we can see Bitcoin being the pink line. So this is Bitcoin here. Yeah, I mean they definitely trade in tandem, at least lately. Can see it here since the beginning here. Whenever Bitcoin goes up, Ethereum goes up as well. Maybe just yeah, it looks very similar. They're very correlated, uh, at least in recent history.
Is it at
Sla
all-time highs? No, no.
no,
Okay.
no, it would be here. I believe the all-time highs of Ethereum, maybe even further back. Let me see. I guess no, even there, not even close to all-time highs in Ethereum. I guess Bitcoin really
Took off.
took off somehow, while Ethereum did not so much. That's why they're not at the same all-time highs levels or nearby. But at least in recent history, if you just look at the price curve here, it looks like so similar. When one goes down, the other one goes down. When one goes up, the other one
If
goes up.
and look at that like quadruple top. I'm glad this was brought up because this could be a really, really
Yeah,
good day trading or swing
push.
trading if it does break that high of the quadruple tops.
Oh, when it breaks the high, yeah, I was
Yeah.
thinking, hey, if it goes up there again, I would short it. But these are different points. And one thinks about a bounce setup. I'm thinking, or Link is more thinking about a break setup. I guess we could let the market decide of what happens. If we see signs of a bounce, short it. If we see signs of a break, then go long. Yeah, for
Thanks.
sure.
Okay, Daniel. Now we have four symbols left, one from Bappa and then three that came in from Steph. And this one's AI from Bappa.
Yeah. All
I'm always
right.
confused if it's AI or AL, but I'm guessing it's probably AI.
Yeah. Okay, I'm gonna take Bitcoin away here. Put my indicators back on. Let's have a look. Okay, yeah, very sideways, huh? Big sideways consolidation pattern here. You can see here bullish to bearish, even that sideways channel. It's a classic sign. And and I saw the same pattern developing in oil, where we're kind of basically bouncing around between this level here and this top level up here. Uh, every time we come into a lower end of this channel, this could be an interesting opportunity to anticipate a bounce off this level towards the middle, in between the lower end and the upper end. So in oil, real quick, same pattern. USO, you've seen it before many times. Yeah, the lower level will be here. Bang, bang, bang. And we see also MA Rush exchanging its mind quite a bit in between. All right, next. Nicholas?
Sorry, I was muted. WIX, still bullish in MA Rush.
Yes. Yeah, bullish for 410 trading days. Wix website company. Let's have a look. Yeah, still bullish. Look where we came from. Wow. I guess they got hyped a lot at some point. Now down here. Now bullish again. But we lost this level. Yeah. Even though we're still bullish, I'd be careful here. We lost this key support level. Of course, we have one more down here, but this correction is a bit too deep now. I also don't really know how they hold up for all this AI development, and the trends go to even more sophisticated websites now, which are not built with page builders like Wix. Maybe they're losing a bit of a market share there from a fundamental point of view. So personally, I would yeah, not go long here. This looks to a bit. It looks like this bullish move is coming to an end and going to a bearish trend.
Thank you. Okay, the next one's HMY, and then we have one more.
HMY. Harmony Gold. Yeah, that's something we looked at as well. Yeah, big move up now, consolidating at this key support level. Yeah, that could be an interesting long if you believe that gold is going to continue its bull run. Now would be the time to get into this, because definitely prices have come down quite a bit. Just key support level, we see a liquidity capture here. So yeah, that could be an interesting one for a long, for sure.
Thank you. Okay, and the last one's Orla, ORLA.
Orla Mining. All right. Yeah. I guess also in gold, right? Yeah, gold space all sounds like gold to me. Yeah, similar thing, kind of like Harmony at a key support level. So if you want to take a shot with a couple of gaps here too, that could be another time to do it. Agreed. I like it for long. Absolutely. Also nice level 4 pullback here as per trend radar. All right.
Okay, I'm just checking anything we didn't wrap up in the questions.
Oklo is one
Yeah, that
question.
would be the last one then if you have time.
Yeah.
And Gerald, no, there isn't, but I'll send you a link in the chat to our video bootcamp. Gerald asked, do we have a written discussion that explains all of the settings in Liquidity IQ? We
Yeah,
don't.
the only thing that we have, Gerald, is our ebook, that where we describe the setups in general. So what is a bounce setup? What is a zone break retrace setup? What is a zone break setup? So that's written in the ebook. But the bootcamp, I guess, would be the best way to how to find them in the dashboard. Okay, so Oklo is a company in the utility sectors, a sector which is bullish for 307 trading days, broke above its resistance 4 days ago. And now here we have a short bounce set up for Oklo. And yeah, so if I take all this information into account, what I could infer, but it's also new information to us, is that this sector is breaking out utilities. I think it may drag in a good way Oklo with it. So I think this short bounce, like a bounce off this resistance level, may not happen. And instead, we're going to break above this level to the upside because of the sector being breaking out. Let me click on XLU here. What's going on? Yeah, we just broke above this level. Also, look at utilities. It was not affected at all by the big retracement on in the SPY. So that's definitely a sector which is on the run up. Let me actually quickly, just for the fun of it, let me go to this dashboard watch just at the sectors, just to see which of those went up on Friday and which ones went down. Yeah, look at this. So basically all the sectors, they went down. Most of them is energy, real estate, technology. It's the biggest losers after Friday for daily drop, except for utilities and healthcare. Wow, that's interesting. Cool. And Oklo being in the healthcare sector, that's pretty cool. And by the way, guys, if you're wondering which stocks are in a particular sector, what you need to do, let me go to sector here and simply select that's healthcare. Oh, sorry, what was Oklo in? No, it was not.
Oh,
I,
yeah, I'm not sure.
I forgot. Utilities. Okay, so you can simply go to the utility sector here, and then you see all the stocks which are in the utility sectors. Yep, which is going to be Oklo, of course, as well. Yeah, interesting one. All right. Okay, good. Gold versus stocks. If you can hedge with gold, yeah, I think you can to some degree because oftentimes if stocks, well, it depends. I mean, we had a bull run in the stock market and a bull run in the gold market for the most part lately. So many say, okay, gold could be a good hedge, but um, it, it it may be still affected. Let me just quickly, just the last comment here. Let me open up the SPY and overlay GLD over it just to see how it looks like, how correlated or uncorrelated they are. So I'm going to add GLD. There we go. Yeah, I mean, gold definitely went up when we had this big drop tariff-wise here. So that was definitely a bit inversely correlated. But then also lately here, gold, I guess it's been struggling while the SVO went up. So I guess they are to some degree inversely correlated. So yeah, I get it. Lenny, this could be an interesting hatch to have. Absolutely. Good. All right, guys. Well, thank you so much. Let me quickly go back to my slides. So if you don't have our ebook yet, this link is in the chat, tradingindicators.com/power of three. Also, if you don't have our dashboard yet and you want to try it out, go to tradingindicators.com/view and try it out for a full week. And of course, we do have the bootcamp here at tradingindicators.com/bootcamp, where every single feature of the dashboard is explained. with this, guys, two announcements for next week. Of course, with Discord too, but two announcements is that we have our Lunch and Learn session on Tuesday at 12 p.m. And then for Wednesday, by the way, we're gonna have a little surprise on Tuesday because it's our 100th session of Lunch and Learns. So we have 100 session, 100 times we've done it so far, which is quite an achievement. So we do have a little special thing planned for Tuesday at 12 p.m. So if you can make it, there's going to be a bit of a surprise, a small surprise there for you. And then on Wednesday, we will have another live trading workshop planned, which was so much fun last Wednesday or Thursday, Wednesday it was, where we had some really great trades. It was an amazing trading day. Markets continued to be very volatile and our trades worked out really nicely. And we're going to try to do the same thing this Wednesday as well at 12 p.m. All right, guys, with this, have a great trading week. Stay safe, be careful out there, and enjoy your weekend. And we'll see you soon. Thanks, guys. Bye-bye. Will you send us t-shirts? Maybe. You'll see, Lenny. All right, guys. Bye-bye.